Let's talk about price. The October numbers are in. What do they mean to us? Hi everyone, my name is Mike Rennick. I'm the team lead, the senior broker of Team Rennick. We're part of that great Mangrove Realty Associates family. The data I'm going to review is effective through September 30th. They call it the October data because it is published during this month. Let's take a look and see what's happening. The biggest question I get asked is what's going to happen with price. We'll take a look at the local data. We'll see what national experts are saying, but there's nothing in any of the numbers that indicate price is going to relieve soon. We'll talk about that. So let's look at sales. Down 12% from a year ago. Sarasota, Manatee County, macro level, looking at the data from 12 months ago. And we see the last 3 months, the trend has been down over the prior year. Pendings, down 13%. Pendings are properties that are going to close in the next 30, 60 days, so future sales. And we have a 4-month trend of down. Price, though, up 25%. Price continues to rise. We see all through the chart from March all the way through now, the October data, double-digit price increases, well over 25, 30%. Days on the market, 66% down. Things are still selling fast, even though they're selling a little bit less numbers are selling. And months of inventory down 58%. Let's take a look at the charts and go into this a little bit. When we see price on here, or when we see the unit sold, it's the green bars, and we actually see it sliding downwards when we look at month to month. And when we look over last year, we see that sales are down 12% from a year ago. On the pendings, like I said, they're down 13%. Pendings on this chart is the red line, and we continue to see a little bit of a downward trend there. So what's going to happen in the future? We'll come back, we'll talk about that. When we take a look at price is up 25%. Look at the graph here. And it's staying pretty consistent month to month, but significantly higher than we saw last year. So price is not changing, at least in the short run. Days on the market, we see that it ticked up just a little bit last month, but significantly down from where it was a year ago. That trend continues. When we look at months of inventory, starting to come up. That's the problem with the market right now. It's supply side availability. It's the number of listings. That's what's driving the bidding wars. That's what's driving the price increases. Let's see what happens if that continues to rise, and many experts are suggesting that they will. Let's take a look. We go into the national scene. We look at what Bill McBride from Calculated Risk has to say. And I quote, "My sense is the Case-Shiller national annual growth rate of 19.7% is probably close to a peak, and that year-over-year price increases will slow later this year." The experts are suggesting prices will continue to rise in the next 2 or 3 years, but they're going to rise at a slower pace. When we look at the chart here of the map of the United States, price appreciation, you see that Florida is in the yellow, and that's 15 to 20% over a year ago. Look at the chart, estimated home price performance. They're suggesting in 2021, historical data up almost 12%. They're suggesting next year we'll see a 6% increase, 5.82, about 4% in 23, about 3.5% in 24, and about 3.5% in 25. So most national experts are suggesting prices will continue to rise. So when we look at home value change on the next slide, we see that in 2021 it went up almost 12%. They're saying through 2025 they estimate growth to be about 6%. Value price will start to taper. And cumulative through 2025 with the past years we've had, it's almost 32%. So let's look at real quickly 3 reasons why listings may continue to increase throughout the fall. That's the big thing I said, supply side. Number 1 is pent-up selling demand. Homeowners may be more comfortable putting their homes on the market as more and more Americans are getting vaccinated. New construction is starting to take off. There will be more options for current homeowners to consider when they sell. And number 3, the end of the forbearance will create new listings. So when we look at this thing, let's come back to price. The things that happened in 2008 through 2012 with people being oversubscribed with mortgages, home equity loans, bankruptcies, things like that, none of those are in the mix today when we look at the local economy and we look at the national economy. So everything is pointing, unless there's some significant international event, everything is pointing that prices will continue to rise. So what does that mean? If you're thinking of buying and you don't like what you see out there today, if you wait 12 months, If the experts are right, we will pay more for that same property 12 months from now or 24 months from now. Something to consider depending on the motivation for your purchase. That's the data. That's what we have right now. I'd like to go deeper in terms of what you're looking for. Let's take it down to a subdivision or a condo association level. Let's see what's happening. It's all about leveraging the data to get you the best deal, whether we're working with you as a seller or working with you as a buyer. Your broker has to understand the market dynamics so that he or she can leverage those appropriately. Feel free to give me a call for no obligation analysis. Again, this is Mike Rennick, my personal cell, 941-400-8735. Thanks for watching, everyone.